it's best for everybody to go to the EventBrite link and register that way so that we have one central location to keep up with who's doing this for the 8 hours, who's doing this for the CE and which of the CE, and who's just doing it because they need the information. This is one of those classes where I really wish that it was a mandatory class, because this is the, I mean, this we're talking about people's money and your money with the closing disclosure. So this class is so important. The title commitment class that we teach is extremely important and really should be taken once a year. And the other class that we will have next week that is really important is you guys understanding the difference between your CMA and the appraisal, and how the lender is looking at the appraisal versus how you might be looking at the appraisal. So we've got some really important classes for you guys running your business like a business and not just running by the seat of your pants. I mean, like, you guys are trusted professionals and people expect you to know these things. And a lot of times it's just great, even if you know these things, to be refreshed on them. So we try to make sure that those are included in the fall series and the spring series so that you guys have the reminders and the opportunities to attend the classes, and we change them up enough that if you came to 2 in a row, you still wouldn't hear the same things. A couple of housekeeping things I want to go through really quick. I covered the CE requirements, so you guys know how that's handled. The right now, what you guys are going to see in the industry, there is, like yesterday's, the CPI yesterday, the Consumer Pricing Index, still shows that we have an inflation challenge. Fed rates went up drastically. A lot of times the increase in the Fed rates means that you have a decrease in mortgage rates because that is negative news. However, the adverse happened, and we saw rates even posted in the 7s, depending on the scenario of the customer, the property, the loan program, the length of the loan. My point to you guys is, if you have people shopping right now and they have not talked to their lender in the last couple of weeks, if they haven't talked to their lender in the last couple of days, the numbers they have in their head and what they're going to see on paper are going to be 2 different numbers. Our market is changing rapidly and in some cases drastically. So please, please, please follow up, follow up, follow up, follow up. You cannot have enough conversations right now with your buyers and sellers, keeping them abreast of what's going on in the market. Because this is not, y'all, I've been doing this greater than 25 years. BJ's been doing this, I don't know, 30, 35, 40 years. This is not like anything any of us have ever seen. So you have to, Jim, how long have you been doing this? I mean, this, you cannot be educated enough on what's going on. But at the same time, you have to be very careful about where you're getting information. So if you guys are confused and you're wanting some information, my secondary guy, not only is he the sexiest guy I've ever seen in the secondary market, usually those guys are real nerdy. This guy's not. He's fun to listen to, but he also is very good. He's very, very smart and very connected in Washington and Fannie, Freddie, and all of the agencies. Like, he is on their demand list. I think it's because he's so good looking. But he articulates really well in layman's terms as to what's going on and how it affects the market. He's the guy in our second, his name is David Batney. However, he sends out a report every single day explaining exactly what's going on, what they're saying. I only report snippets for you guys occasionally on the Facebook group. The private Facebook group was set up for you guys to get good information on what's going on without the world seeing all of that information, because I don't want to put it out there for everybody. But that's a good place to go for information. But raise your hand to tell me if you want more current information more often. And I can certainly start doing that so that you guys have like a daily update, since it's shifting and changing that quickly. We're doing the best we can. You will find, I don't know how many, a lot of mortgage companies went from private to public in the last 24 months. So you can track their IPOs and their stock values. And if you will notice, people, I mean, it's tough right now. Who will and will not make it in the mortgage industry, you guys will see you'll start seeing some fallouts pretty drastically. Some big names. Rocket is struggling. Loan Depot is about gone. Wells has said King's X, we're out. They've even laid off and shut down all their mortgage departments. Chase is saying, we only want cream of the crop, that's it. And you'll find that from more and more lenders. And those that are trying to still make it will deep cut, not worry about posting profits, but just cut all of their rates just to capture what business they can, just to see if they can sustain and stay in. So you're going to see a some big shifts and changes going on in the next couple of months. Our stance is, I mean, we've been around since the 60s. We service our own loans. We also went public. So we do have to worry about our share values, but at the same time, we have always serviced really well our FHA, our VA, our first-time home buyers, and those harder loans. Because we service our loans, we can track the success and the payment history of people. We have a pretty good idea what we're willing to take in terms of risk of people paying their bills. And so for that reason, you guys, if you've got someone else that, you know, if you've got someone that's working with another lender and things aren't going well, or you're hearing, no, this loan won't work, don't give up until you run that scenario through us, because we've got a lot of programs that lenders don't have. And we also have flexibility a lot of lenders don't have. Now, I can't compete when people are willing to lose money and post extremely low rates. Sean's going to see a lot of crazy stuff going on his end. He can tell you what he's experiencing thus far. But what I'm saying to you guys is that the way we will stay in the game is playing it safe and helping people in homes that a lot of people won't help while still playing it safe. So just what's going on in the industry. Numbers wise, in this area, I did a news story with K10 the other day, and it's a great news story to share out to your database or your people that are looking to buy a house. Our area is not posting the same stats that the nation is, and your people may be listening and reading what their friends tell them or what they're seeing nationally, and that's not reality for our area. K10 did a great story. Molly is one of my favorite reporters because she does her research and she'll listen and learn both sides of the story and try to find the truth in it. And fortunately, too, she will look at local versus national. And our numbers are not the same. We're tracking, I mean, we are healthy in terms of inventory. We're healthy in terms of what people are paying for properties without overpaying. We're healthy in terms of days on market. I mean, we are just really in a healthy market, unlike a lot of other places in the country. So if y'all want a local story that compares and contrasts local versus national, she did a really good job on this story. So I can send you the link to that. In fact, I may just post it in the Facebook group so you guys can just copy and paste the URL. And maybe send that to your clients by text or email and say, listen, I know you might be a little nervous about what's going on. But even at higher interest rates, you're not paying as much for houses, and sellers are willing to negotiate. And you have choices now instead of just one or two homes that you got to decide on in 2 hours. So there's still some great opportunities. I just want you guys aware of reality. Tomorrow at Better Homes and Garden, I will be at we will be finishing up on the 7 Habits of Highly Effective Real Estate Professionals. We've been doing that once a month. This is the last in the series that we're talking sharpening the saw, which is what we're talking about right now. Be educated. And that is at 9 o'clock at their beautiful office over on Loy Lake Road. Is a workshop. So come with pen and paper in hand because we're going to do some exercises. On Travis, not Loy Lake, Travis, North Travis. And then I'll be at Easy Life and we're talking about the different personality types. How do you identify the 4 different personality types using DISC profile, and how do you communicate with them? And then Monday, don't miss it. I'm going to tell you guys, the reserves where Pat Boyd is has, we're having a class on how you can use these incentives that are available to the buyer, $20,000 and $30,000 in incentives. How do we maximize those incentives? Using lender credits in several different ways, or seller credits in several different ways. And then also she's got huge, unbelievable closeout prices on those homes that she's got left there because she's finishing up that subdivision. So that is, no, just be sure to show up, spread the word. We'll have lunch for you and $300 gift cards as giveaways as an incentive for showing up. So please, please, please come to that. And then next week, 10 o'clock, we'll talk in appraisals. I have Chris Green coming, so he can cover from the appraisal side, and then I'll cover from the lender side. Got some other really cool classes in the works and some things that we're talking about, like I think I'll teach y'all math, like mortgage math, personal finances, business math, all of that fun stuff next year. So I'm really, and maybe we'll even start this winter if you guys will show up. And that's just get to pen, paper, and your calculator out, because I'm going to show you how to do the math. Some of you guys may not want to show up if you're not a numbers person. Preston's going, hell no.
I was told to do that.
All right. Yeah. And then last but not least, you guys, I can do this here today because I got a team at the office, but we need some loans. So send us anything you can't get done somewhere else, or just send us business because you love us. Castle team at guildmortgage.com or .com or .net. I have with me today Shannon.
Thanks.
Sean Kincannon. It kind of goes together. We shortcut it to
It
Shannon.
better to have Shannon, but that's okay.
Yeah, Shannon's pretty cool. To explain closing disclosures to you guys, please know and understand it's the lender's responsibility to disclose the closing disclosure at least 3 days prior to closing. We have to present some numbers to the buyer, and these numbers have to be pretty darn close. The lender numbers can't change from loan estimate to closing disclosure unless it's a change of circumstance out of our control. Otherwise, we have to honor the numbers to the penny for what we disclosed in the very beginning. And we only have 3 days from the time that we get a property contract or a property address. We only have 3 days to disclose the exact numbers on the lender side of the transaction, which is why it's really important you tell people they have to make number decisions fast. Then on the end of the transaction, that closing disclosure looks a lot like the loan disclosure with some differences. And Sean will go over those with you. But I want you guys to understand the math behind the closing disclosure and the timing, because if that closing disclosure does not get signed by midnight, 3 days prior to closing, your closing will be postponed. It's a federal law. It is not a lender rule. And so it is really important you guys stay on top of that. I don't know how y'all do y'all's transactions and stay on top of the timelines, but you need to set a reminder in your calendar and make sure the lender has sent that out 4 days prior to closing. Sundays don't count, but Saturdays do in that timeline. So if that doesn't happen, and federal holidays don't count in that number. Don't go finger pointing unless you're also willing to point the finger at yourself, because every one of us are responsible for knowing timelines on these transactions. It is not just one person's responsibility. We're all professionals in this business and we play together as a team. So don't finger point, but also know what the responsibilities are. Do not finger point.
That's what she was doing.
Do not finger point. I finger point at myself. And then all we know at that point is the preliminary figures. We've got to reconcile with the title company before we give final figures for people to go get a cashier's check. One more thing before I have Sean come up here and start going over the slides is if you've got someone that's moving from outside of this area, or you have someone that has to go down the Dallas area to go get a cashier's check for closing. Our concern is always sending the wire. I mean, the wire fraud is a real thing and it is awful when it happens. So I try to avoid wiring as much as possible because I don't want to be responsible. So if someone needs to go get money ahead of time, typically that closing disclosure that we issued, the initial closing disclosure, is close enough for them to go get a cashier's check. So you're not waiting to the last hour. It removes, one of the 7 habits of highly effective people is if you can prevent the panic, prevent it. And that is one way of doing it. Estimated figures are close enough as long as they have a checkbook. And you'd be surprised how many people do not have a checkbook. So don't assume that they do. Ask those questions. Again, it's all of our responsibility to make sure people know how much money they need. Don't panic if it's not the exact amount. Sean may change the figures at the last minute anyway.
Always me.
I'm pointing fingers because an invoice didn't show up till the last minute. Somebody forgot something that needs to go on the closing disclosure. So exact figures don't always happen till the very last minute, and that's okay. But let's go over the closing disclosure so you guys feel comfortable explaining the numbers and asking questions. Come on up here, Sean from Red River Title.
Hello. So I'm going to piggyback real quick on off script, right? For what she just said too. Every lender is supposed to 3 days, and they do, but not every lender tells us as the title company when they've disclosed. So many times you'll call us and say, my borrower got the CD, what's going on? Why haven't you scheduled closing? I don't have any idea. Guild, one of my favorite lenders, I don't know when they send it to the borrower.
He's saying that because I'm standing here.
No, I'm serious. Listen, this soapbox that anyone's ever been to any class on any topic, I've always said is local is always better. You can buy a car and find a better deal online or in the Metroplex. You can buy furniture in the Metroplex at big box stores at a better deal. You're not going to find a better deal with lenders and vendors than local. It's just, it's the reality. And they know the market, but they also offer the same products that big box online and all those other ones offer, so you don't get a better deal. So that's why dealing with locals better. But the whole point is I can't guarantee, or I have no idea when a lender discloses that CD to a buyer to start the 3 days. And the other important thing about that is I think she's exactly right. If you feel like it might be a crunch for timing or to get money, I think she's right. It is a good idea to tell them, get your cashier's check for that amount. Get your cashier's check for that upfront disclosure plus $500, right? But also, Michelle, correct me if I'm wrong, the lender sends the CD to your borrower, but they don't send it to you. We will send it to you once it's final, every title company, right? But the lender doesn't. So when you do, tell your person, hey, go ahead and go get your cashier's check for that amount. Look at it first. Have them send it to you. Because you will know if there's an invoice missing or a seller concession amendment that is not reflected on there. But look at it first. Go ahead.
So Trek wrote a law when the CBD, the Consumer Protection Bureau stated that
CBD, that's something
else.
Not
CBD. Sure, isn't it?
That's a little different.
Okay, well.
It does apply to real estate, but for its wholly different reason.
I knew there'd be some humor, but I didn't know it'd be my mistake.
That color hat.
The Consumer Protection Board, CFPB, there we go, stated that we can't send that directly to you guys. And Texas then said, we're going to write something up to give you permission. Then it's up to the lender to decide if they're going to follow Texas rules or federal rules. So that's why you'll see that some lenders will, some lenders won't. It's a good idea to just get your customer, just have them, just like the appraisal. Get them to forward it to you. You're your hired service. You want to review it. That's perfectly fine. Just, rather than
I don't think any preliminaries ever go over, even if the lender has a business decision, they'll send it to agents. I don't think they send the prelims. And we're just talking about the prelims, which we'll go over more in a second too. But anyway, that's not always, my point is it's not always an indication that closing is ready either, because that's the other call I get quite often. Oh, my borrower got it. I'm like, well, that's great. They got it. I didn't. And what she said earlier, that is the step. They sent it to us.
at some point, preferably early. Guild and our local lenders, there's a couple that I won't name names that have a different practice, but almost all of them send them to us fairly early. Even if we don't get docs until 2 hours before closing, we generally have balance CDs early enough where I can send those out. Now, I do, or the title company does prepare the seller CD. So if you're on the listing side, I typically don't release the seller CD to the listing agent until it's to the buyer CD's final, because 85% of those numbers on that buyer CD can affect the seller CD. So, I don't typically release the final, but I can do a preliminary one. If I have a preliminary buyer CD, I'll do a preliminary seller CD. If your seller is buying something in another title company and they need to know how close they are and all that. So that's kind of how that process works. The lender sends it to us. The earlier, the better. We balance. Once it's balanced, 2 weeks ahead of closing, 2 hours ahead of closing, we do our best to forward it on to you. And I think every title company probably has a very similar, if not identical, process for that. How do I see? All right. So again, I'm Sean, Red River Title. Everyone in this room, I think I know and have met and dealt with at some point or another. I looked at the names on the Zoom. There's a couple I haven't, so I'd like to meet you guys soon. But all right. So I gave those that have a hard copy, I gave a printout, 2 printouts. One's a buyer CD and one's a seller CD. We've already, Dodd-Frank can CCFPB, not CBD. Anyway, she already hit on that. That's the introduction of the first slide you see there. I have to get glasses. Okay. And I turned 40 2 years ago, and it's really been tough. But I also think about our business and what Michelle said a second ago. I realized I've become an old timer, at least in the business, 18 years this month. Actually today.
Oh,
September, is it 14th? Yeah, geez. 18 years is a long time. So, I remember being that 24-year-old thinking, oh, these old people, man, they don't know how it's going to be done. Now I'm one of those old people, So, but in reference to not age, I'm an old timer being in this business now. So, for those of you that remember HUDs, gosh, they were so much easier, right? So this kind of gives you a little background on we actually changed from a HUD to what they called a 2010 HUD to finally the closing disclosure. I will say, if you ever had a closing before closing disclosures, the CD was meant to not surprise. That's why they get it early, right? It was meant to avoid those surprises at closings in reference to loans. I thought my interest rate was X. I thought my payment was B. I thought all this other that happened so much, no matter how good your lender was too. It happened because back then it was the disclosure process. I've never been a lender, but the disclosure process was Wild West, and there was as many, I'll say criminal lenders, I could say shady, I guess, or bad lenders. There was as many bad lenders as there were good lenders. Now the quote unquote bad lenders are mostly online guys, but they've cleaned up a lot too. Anyway, so a lot of this is meant to get rid of what we used to. If you ever remember seeing a truth in lending, it was treacherous to go over in closing. It inevitably stopped at closing every time and gave a first-time home buyer especially panic. So closing disclosure was meant to replace that as well as supplement what was then a HUD into this. If you're really interested in all that, we could talk more about it later, but it's not that interesting. Now that we're here, it is what it is. Non-closing disclosure, so non-TRID loans, land, although it could be a TRID if you're buying a lot that you're gonna build on, some banks will consider that a TRID loan, which means closing disclosure, which means loan estimate within 3 days of the contract, CD 3 days in advance before you can close. Other lenders, if you have an LLC buyer on land, commercial, HELOC, home equity, doesn't really apply to realtors here. Home equity is TRID. HELOC is not TRID. Again, that's more of a lending class, not a realtor class. But if you have a buyer buying land in their personal name and they're going to one of our local banks, I would say it's a good chance that's also going to be TRID, closing disclosure. If your buyer's an LLC or they're buying a large rural tract, then it's probably going to be the HUD. Now, you may say that sounds better because we don't have to deal with all these disclosures. Yeah, but now you don't have all the disclosures. So we're back to, could they be surprised at closing? Are you involved in the process? Do you know what's going on? So that's where CDs, as much of a pain in the, can be, that's where they come in play to be helpful. Okay. Am I good so far? Any questions? Loan estimate is 3 pages long. Your client may send it to you. So this is the one that Michelle said you deliver her a contract within 48 to 72 hours. They've sent your client a loan estimate. Everything is over disclosed. I'm being a little more liberal than what Michelle said. It is over disclosed to hell. It's going to have them paying for the title policy, paying for the survey, paying for everything that the contract says they're not. Don't panic. She doesn't want to pay for it. So she's going to say your buyer's paying for it, and then we'll shake it out on the final closing disclosure. So just make sure you don't panic. Your buyer doesn't panic. The lender doesn't want to pay for those items, so they're going to disclose your client is. Okay, that's really that simple.
This is also the document. If anybody were to ever shop their interest rate, this is truly the only way they can shop their interest rate from lender to lender. The problem is a lender is not going to issue a loan estimate until they have a contract and they have a pretty good idea that they're going to be the ones doing the loan. Because once we disclose it, we have to honor that. So it takes a lot of time. I mean, pre-approvals take 4 to 5 hours per pre-approval. This takes another, hour or so if we don't have to research costs. So, but this is the only document. If someone says I'm talking to another lender and I'm shopping my rate, they can't shop their rate without a loan estimate. If they shop their rate without that, they're just, it's not worth the paper it's written on.
Basically the pre-approval she's talking about. So shameless plug, we have an app, Red River Agent. It is pretty darn close. So if you do have a pre-approval, so Michelle says, hey, I can't guarantee this will be your interest rate, but this will be pretty darn close if you do a contract this weekend. All right. Put it in the app with it. It calculates mortgage insurance. Just make sure you know if you're doing FHA, conventional, what type of financing you're doing. It gives you those options. That app, I find, bottom line and payment is usually pretty fair. So if you aren't familiar with the app, get with me. I'll go over it with you. Play with it without. You look at the most recent closing you've already had, and then put in those same figures in the app and see how close you get, or see what you think you need to change in your setting to make it fit. But that app, it's there to help too. It is not, we're not Red River Agent, one word, and then the word spelled out one. By the time you type in Red River Agent in the App Store, Android, it comes up as a result. It's free. There is a paid version for upgrades, but the paid version, 98% of the things you do, 99% of the things you want to do are on the free version. Okay. But anyway, it's not any more. There's no guarantees that, you know what I mean? Like, you tell me it's wrong, I'm sorry, you know what I mean? There's nothing beholding that, but it is accurate. I'm just telling you it's accurate. If it's not, whatever, the news shapings, I'm just kidding. It's pretty fair. I have good experience with it. It really responds to what you put into it. So that's what I say. I try to say that without sounding insulting. When you put it in, well, it says the payment was going to be $100 cheaper. Well, you put in a loan amount of $40,000 less. I mean,
And
that's
mortgage
why.
insurance is so.
And mortgage insurance, it's a calculator. Yeah, it is. So anyway, but there is an app, if that helps. I tell people all the time, I'm going off on a tangent. I tell people all the time, the app is really good when that buyer or seller is staring you in the eye and saying, tell me something now so I can sign this contract. That's when it's best served. Okay. The second time it's best served is when you're at home alone, presenting tomorrow listing agreements or potential offers, and you want to make sure your client is prepared. That's the 2 times I use the app, face to face in a crunch, or when you have time to spread out and really think about it. Okay. So that's the loan estimate. Also, yeah.
And always just say approximate figures and try to figure it on the high side and tell them, I think this is figured on the high side. Just disclose yourself.
I always tell them, give them $5,000.
Yeah. Yeah, give yourself a bridge.
So this is the old loan estimate because appraisals aren't $400 anymore, are they?
No, they're getting back to that. They're getting back.
Okay, good. So this is an extreme example outside of the market we're in, where you're paying a lot of points to buy down rates. No origination fee outside of points to buy down the rates is $1,800.
Yeah, can I say Sabrina or extension 102?
Sure. Hold on just a second, please.
Thanks.
What am I?
Hey, mute yourself.
Anyway, so you'll see, if you can't see it from there, because you're not old like me, so right. Anyway, everything is overestimated here because, again, Michelle doesn't want to pay for it, so she's going to overestimate, which is smart. That's what they should do. All right, so now we're at to the closing disclosure. This closing disclosure 2015. So I'm going to tell you one thing from my perspective: owner policies. Okay. Now, the last year, we've seen a lot more buyers paying for title policies than ever before in my 18 years. Last 6 weeks, I've seen it going to go back to the way it was before, sellers paying for title policies. You're inevitably going to look at the buyer's closing disclosure and see a title policy fee to your buyer. Okay. One thing TRID changed. Apparently, Texas was in the minority of states where it was typical or traditional for a seller to pay for a title policy. So in TRID, or in the government's infinite wisdom to try to make a 50-state version, because that's what this is, and that's the other reason we have this. They said lenders have to disclose the owner's policy as a buyer expense, no matter what the contract says. Okay. So almost always, you're going to see the owner's policy on the closing disclosure on the buyer side. However, you're not going to see all of it. And as we go through it, I'll explain that better. Okay. But just be mindful. If you see the title policy on the buyer side and it's a seller expense, don't panic. We'll clear it up.
What does TRID stand for?
Hold on. Terrible,
Texas real estate.
ridiculous.
Yeah.
No, because TRID's national, so it wouldn't be Texas. Do you remember? It's
I already said
it's
CPB
under the
instead of
CFPB.
CFPB.
okay, and it's the something or anyway
Disclosure.
disclosure.
Yeah, Yeah, Gina's
I know
looking
it.
it up.
Hold on.
My mind's blank, and I know
Yeah,
you're always
but
thinking
TRID
about it.
is, so it starts with Dodd-Frank, then CFPB's under Dodd-Frank, and TRID's under, that's kind of the order of events. So there used to be, well, maybe there still is RESPA. That's who regulated lenders. So now the equivalent is TRID.
TILA, RESPA, integrated disclosure.
Yeah, there you go.
Integrated disclosure, those last two words being the keywords there, because Texas had HUDs, right? New Mexico had HUDs. Oklahoma had purchaser statements, okay? And so on and so forth. And so integrated disclosure means this is what every state uses now. So, and truth in lending is the TILA. We used to have truth in lending. The truth in lending is actually in here, and we'll see it. Okay, so we have, in Texas, we have a simultaneous issue credit on the title policy. Again, we'll get through to that.
Oklahoma's figured just a little bit differently.
Where do my, how do I lower this? Because I can't get to the, that's in the way to switch pages. Thank you.
Mhm.
I'm trying. Okay, so here's an example. We're going to come back to it on the CD in just a second. Okay, but this tells you how to look at it to see if, not necessarily if the premium amount is correct, but if the parties that are supposed to be paying for the title policy are paying for it, because of all the fees from every vendor, the title policy is the most convoluted, most confusing. So when we actually get to the closing disclosure, I'll show you a little more. It'll be easier to understand. So here's the first page of the closing disclosure. Okay, if you have it in front of you, the date issued typically is the 3 days, but it fluctuates. The most important thing is closing and funding, right? So we start there, whatever. Your buyer and seller info. Here's where it's important. Again, this is my version of a CD, which matches what a lender's version would look like. But here's where you start. Your client and you both, if you're representing a buyer, okay? 30-year note, it's a purchase transaction, is it fixed rate? We'll come back to that. What type of financing? Loan numbers, right? Property address. Right, here's the only place you see the purchase price really in this little bitty spot. Is the sales price right? Did y'all do an amendment that you didn't send us or that I overlooked, or the lender? Okay, is that right? Next, if page 1, 2, and 3 are correct, closing is going to go smooth. All right, loan amount. Can this amount change? We want to see no's. As many no's as possible is great. Can this increase after closing? No. 9.9%, 99.9% of loans, TRID loans, are not adjustable rate. They're not negative amortization. They're not any of those.
But
things.
we are starting to see them again.
I was
So
gonna say
we
that.
watch.
So that's the next one. Interest rate, 2.75. Remember? We all have member berries? Remember? All right, can this amount change? So adjustable rates are coming back. They're not as scary if you were in the business in 2007 to 2009. Those were the ones I call criminal shady. That's where a lender, Michelle's over here telling you, I can get you 5%. And this lender over here, I'll get you 4.75. Yeah, it's going to change in 3 years, but don't worry about that. In 3 years, you're going to make a lot more money and all that. Well, it changed to 7.5 in 3 years or 2 years. They couldn't afford it, got foreclosed on. That's where we were. This version is going to be different. It is going to be the intention, but we're not talking about that today. The important thing, can this interest rate change? No. Next, principal and interest. Very important for your client to know what their principal and interest is. Can it change? No. If the interest rate's fixed, the principal and interest should be fixed, right? Next two are very important as well. Prepayment or balloon. Sometimes on a land transaction, you'll see a yes or a yes on one of those two. I wouldn't panic if your customer's buying a lot that they're not building on immediately. It's going to have a balloon in a year because that lender's saying you're going to build in a year, right? But for the standard real estate transaction, 1 to 4 family, preferably you want to see those. If you see yeses, ask your client before you call Michelle and say, "There's prepayment penalty. What's the big idea?" Ask your client. Did they talk to Michelle already? Yeah, I know about it. Great.
I signed plenty of forms
That's
because
right.
that part's changed too.
That's right.
People do not get interest-only loans or ARMs or prepayment penalties without big, fat, big letter, bold print disclosures.
So up here, we said that nothing's changing, but down here, it says the payments for the first 8 years are going to go down. Why? We have mortgage insurance, right? They're doing conventional, but it's conventional insured, not FHA, all right? So their payment, principal interest is fixed. Depending on the type of mortgage insurance, that may change, whatever it is. Escrows right here, and then you'll see 283, but if you go down here, it actually explains what is in the escrow account. Typically tax and insurance, sometimes flood insurance. Some lenders are doing HOA dues now too, not very many. But anyway, that 283 is then itemized in the next box. And so the years 9 through 30 just show when that mortgage insurance has fallen off because they've done conventional insured.
Hey, can I pause on taxes real quick?
Yep.
So one thing you guys need to pay close attention to on property taxes. People are, in a lot of cases, they're escrowing their payment. And what we're seeing right now is some lenders will estimate the property taxes based on last year's taxes. I don't know about you guys, but there was a pretty significant increase in values this year. If a lender is not estimating the property taxes based on this year's values, they're going to be short in their escrows next year. And they're struggling right now to digest what the payment's going to be on the house right now. What's going to happen next year when they bought a $350,000 house? The escrows were set on $275,000, and now there's an $80,000 value discrepancy in which they're being taxed on. And not only do they have to estimate what it's going to be for 2023, but what's the shortage for 2022? That's going to cause a big jump in their in their mortgage payment, and could cause an affordability issue. Question your lenders, and if they're not escrowing for the full value for this year, please call them out on it, because a lot of times what lenders are doing is showing cheap payments to get the deal, but what they're not doing is accurately figuring the cost of taxes and insurance, and it will not show up until closing, and it may even close that way with the low property tax figures, but that does not mean that customer is off the hook for the full bill that will come out at the end of October, beginning of November. So again, you guys have to be paying attention and aware of how the math is calculated, because we're all professionals in this business together.
So some of you, I bet there's 1 or 2 in this room were saying, well, what about tax prorations based on what she just said? So this time of the year, especially if you're a buyer's agent. So one thing Grayson County Appraisal District has done this year, it's the first year I've ever known of them doing it. January through mid to late April, the current year values just say NA. We don't know what they're going to estimate to the current year's tax. Sometime around the 1st of May, they've released those estimates. We've all got those appraisal district letters in the mail. 2022 is the first year that they have now removed what the taxes would be based on that value. They used to have on there what the unexempt taxes would be based on that value, and what the exempt taxes would be based on the exemptions that are currently applied. All of them. It was a really nice feature they offered. Well, they got tired of that. They got tired of the phone calls related to that. So what they've done is asked the tax assessor, a completely different entity, to add a tax estimator on their website. They have, if you're not familiar with it, go to it. It actually works really well. It's a good tool. It has every single Grayson County tax paying entity included. You're looking at the appraisal district. You know they pay City of Sherman, Sherman ISD, county and junior college. Okay, so you just it's like it actually lets you put the property in too, and then it defaults it for you. But if you just want to put a value in there, you can do it. All right, why is that important? It's almost October. If the taxes in 2021, which is what the title company is looking at, were $2,000 for the year, but you're looking at the CAD and you see that value, the seller is in a state that the mom died in 2021, or just values doubled because it was an investor who flipped it. Go to that tax estimator, put in the CAD value, call the listing agent saying, hey, your client will have owned this when we close for 10 months, my client for 2 months. I think it's fair we use, even though they're not certified, because they're not certified until you get that tax bill. That's when they're certified. Even though they're not certified, would your client be willing to use the increased amount? Real quick, paragraph 13 of your contract commits everyone to agree to do it at some point. So what I'm telling you is you're asking them to accelerate what the contract promulgated already says, or what it already says promulgated. Whatever.
But you gotta chase the seller down after the fact.
That's the difference. Chasing the seller down after the fact. Whatever side you're on, if you've been the listing agent, someone's asked you, you've said, my client's not gonna do that. That's not fair. Call me when taxes come out. And if you're the buyer's agent, you've said, hey, it's only fair for you to do it, even though my other seller last week, right? Hey, just do what's fair. I am only going to use the most recent certified year unless you guys tell me. So don't call me as a buyer and say, well, the 2022 estimate is double. Well, it's only an estimate. That's why it's called an estimate and not a certified amount. After taxes come out, it's certified. So anyway, another thing to do during the due diligence, either maybe even do it before you make your offer. That way you can include it in the offer.
And honestly, the loan estimate needs to reflect how you guys wrote the contract in terms of the prorations and what the seller is and isn't gonna do, because we've got to make sure that there's enough money in the escrow account to pay the taxes at the end of the year without a shortage. Not all lenders will look at and compare and do those escrow reserves correctly, which will then cause a shortage later. It's just another one of those areas where lenders can show that they're beating me because their closing costs are less, when in reality, the closing costs are not. They're just not being truthful with the information and doing it right up front.
All right. We've actually, believe it or not, talked about most of the hard stuff. So let's keep going. The closing costs, what are those? Well, we're about to show you. And then the bottom line. The bottom line appears twice on the final closing disclosure. Page 1, and you'll see in a second, page 3. So page 2. All right. Loan costs, paragraph or sections A, B, and C. Okay. First of all, everything on here is in some way referenced on the loan estimate, like she told you. Okay. A through C is what Michelle is regulated on, literally out of her pocket. In other words, if she disclosed on that loan estimate an appraisal of $400 and it came in at $700, somewhere you're going to see a lender credit for $300. It happens, you know. But as a buyer's agent, not a lot you're going to do with A and B, section A and section B. Those are the lender's fees. If you want to take the time to go through the loan estimate and see how close you got, that's fine. But those are lender fees. C starts some third-party fees, including title. Sometimes the survey's there because if Michelle disclosed the survey fee to the buyer and it was charged at closing, that's where it's going to be. If Michelle said that's a service that we don't have to disclose because of there was an existing or it's a seller expense and she's confident it's a seller expense, you'll see it down in H.
Most of the time, you'll see the loan estimates with the survey unless we have a T47 accepted by the title company. You will
This
see
is
that.
not a survey class, so don't ask. Just kidding. All right. So A, B, and C, lender fees, title fees. You see a seller column because it's my CD. My CD on my computer is a both side CD. Is that a word? Both sides? Anyway, but for a buyer's CD, so as a buyer's agent, in just a second, we'll get to H, and you don't see the commission, or you don't see the seller invoice that you know a new survey was done, a survey invoice to the seller. Don't panic. I would say it's literally 50-50. 50% of the lenders will do a seller side CD matching ours. 50% don't even do it at all. So if you're representing a buyer, absolutely reach out to the title company, confirm the survey is being paid, confirm that you're getting paid your commission, or it's 2.5% instead of 3%, or whatever it is. Feel free to reach out if you don't see it, but also don't panic because you're getting the CD, the lender prepared, and they don't always put stuff on the seller side. Okay. But make sure the buyer side's right. All right. E is recording. Every title company should charge what the county charges. That's what we call a pass through. Section F, prepaids, also pass through the insurance. Whatever State Farm charging your client, that's what is being passed on to them. Okay. You can look, is it Allstate? Hey, Mr. Buyer, did you get an Allstate plan? I have seen, it happens about once a month. I get a call and they say, who's my insurance? I didn't pick that. I picked someone else. So it doesn't hurt to ask. If you didn't refer the insurance agent or haven't talked to them, tell them, make sure that's your insurance. It happens more than you think. Interest, if you're curious, why do you pay prepaid interest? If you don't already know, interest on every single mortgage from every single lender in the United States is in arrears. So you pay prepaid interest. That's why you always skip a month at closing, whether you're closing at the end of the month or the beginning of the month. That dictates how big that number is. Closing at the beginning of the month, you're really skipping 2 payments. Closing at the end of the month, you're skipping 1 payment. It's a daily amount. Okay. Next, what she just talked about. So page 1 showed the total amount collected. Page 2 actually shows what they're collecting in insurance and taxes monthly. So that's where you look right there. You know the taxes are going to go up. Right here, they're charging $175 a month. Well, you've done the math. 4,000 divided by 12 is $350. They're collecting 175. Hey, Mr. Lender. Hey, Mr. Buyer. I think we're going to have a shortage. Depending how detailed you want to get with it, that's where you see it. Okay. Paragraph H, any third-party vendor fees that your buyer's paying will be on the final CDN 8 or should be, right? So that's where you would find that. So you have a total of A through C, that's 5466. Then you have a total of E through I, 3966. So the total of 9433 that you saw on page 1. But wait, there's more. You go to page 3, and that same 9433 you just saw on page 2 is now carried over to page 3. So that's the same number. You've now seen it 3 times, right? The closing costs. Any questions so far? Makes sense? I'm going to skip to the top just for a second. So I said at the beginning of page 1, you can look at the loan estimate and you can look at the CD next to each other. Well, the government makes them do it for you. So actually, the fees that Michelle put on her loan estimate are right there versus the fees that she actually charged at closing. In this case, there's a $1,200 difference, okay, in your buyer's favor, okay? If it was opposite, going back to page 2, in some fashion, you'd probably see a $1,200 lender credit. Does that make sense? Okay. All right, so back to the actual balance sheet. So again, we're only looking at the buyer side here. Purchase price is $175, $9,400 in closing costs we just went through. Those are the debits of this transaction, okay? Buyer and seller side have to balance. L are your credits. They put up $1,700 since option fee changed last year. Some title companies, some lenders, everyone handles it a little bit different. Just make sure the total credit deposit matches. So let's just say in this case, your client put $1,500 earnest, $200 option. You don't see it called option, but you see a $1,700 credit, you're good. If your client put up $1,700 in earnest money and $300 in option for a $2,000 deposit, you're missing it. This is one of the things we talk about, that you as the agent, you're checking us. This is where the lender said, hey, they pay cash. We couldn't verify it. Talk to the title company. We call it balanced, out of balanced, where we give your earnest money back when we fund. That happens when your buyer pays with money order or cash. If you've experienced it, you know what I'm talking about. If you haven't, when they pay with cash and money orders, lenders are getting good at verifying those, but that's what happens. Anyway, that deposit, and it's just referred to as a deposit, is earnest and option. If there's additional earnest money, cross-check it. Loan amounts of credit, we have seller concessions. All right, let's talk about the title policy. So over here on page 2, go back to it just for a second. The title policy in this case for $175,000 was, rough math, I lost my spot. It was, let's say $1,200. It's a little bit more. Okay. So look, they were charged $1,189 in Texas. Without boring you, it's called a simultaneous issue credit. The buyer's paying for the lender's policy. The seller's paying for the owner's policy. The simultaneous issue credit means the buyer pays $100. Okay. So your client has been charged the title policy on page 2 up to the lender amount. Again, I'm not trying to confuse you. It truly is that confusing. Okay. But just know your buyer is supposed to pay $100. Okay. So when you go to page 2, look, they got a credit for $10.89. There's a net $100 charge to your buyer.
And you guys, just so you know, this is a Texas promulgated, the title insurance cost does not vary by title company.
That's right.
It is a standard fee and it's on a schedule.
There are examples when it's more than $100 when the loan amount, like a VA financing, but
Or if I ask for
nominally
an-
more.
An addendum. I mean,
Yeah.
a-
Well, the endorsements are extras. Those aren't included in that number. That's a different line item. But anyway, this is why you see on page 2, why are they paying for the title policy? Go to page 3. Do you see a credit? If you see a credit, then you know that credit, even though you're looking at the buyer CD and don't see the seller side, that credit has to come from somebody and it's coming from the seller. Again, feel free to shoot an email. Just want to make sure you got the title policy on the seller side. Yes, we do. Thank you. The end. All right. So we have credits. Oh, the last credit is prorated taxes. We just talked about that. I prorated the taxes here. I've got, obviously this is closing October 20th. So I've got this closing or taxes at approximately $2,000 because they're getting a $1,600 credit to, 9.5 months to the year. Taxes are probably $2,000. But you have already looked and you know the estimated 2022 taxes are $4,000. Asking for a proration change the day before, day of closing, probably not going to happen. Okay. That's why it's important as both sides. Truly, if you want to be absolutely fair as a listing agent, look at the values. Did it go up? Tell your sellers, hey, you realize your taxes have gone up? Yeah, I got that letter. The contract is going to tell you that we have to reprorate in October, November. Would you rather do it at closing and just take care of it and not address it? That sounds like a great idea. And you're going to look brilliant to your sellers because they don't want that. They don't want to close in May and get a phone call in October.
They've already spent the money.
Yes. And they're going to say, go up a river. Then your buyer's going to, do I want to go to small claims court? Do I want to see? They're going to cuss me out like I knew about it. That's what's really going to happen. Sorry. That's the reason. I'm just saying. But again,
And they're gonna
as
be
a
mad at
listing
me because
agent,
they're gonna be short.
as a listing agent, look at that right away because of the market we're in. It's not like this is something that's been going on forever. The increase in values. This is a 2-year trend. So now it's time to set yourself apart from other agents that aren't looking at those things and not wanting to get that phone call in November when they're trying to plan their
Hey, we
Thanksgiving.
got a lot of new construction. Can we address that real quick?
So new construction it falls in line with the same theory of a large increase in value, right? We won't know until April, right? So anything you're closing from January to April, I can't help you because I'm looking at the same thing you're looking at, right? Rule of thumb, if they've got sticks up in January, they're going to be billed on something or some improvements, not just the raw land.
Mhm.
If they've got grading done on the ground, maybe the county will bill for a foundation only, maybe, but anything short of forms is probably going to be unimproved. So just, if you're writing a contract in May, ask them, where were you in January? Do you know if this is going to be estimated 2,000, if the taxes have any improvements included? Again, that way you're asking the builder to include those improvements, and even Highland will do it. Even the big tract home lenders or builders will do it because I bought a Highland and I asked them to do it and they did it.
The
Go,
one
hold on,
thing
she got a
though
question.
is your escrows are still gonna be
Oh.
figured based on future taxes, not present, because we have to be prepared for what is and what will be. And we have to look at it both ways. So the lender is still going to estimate the payments based on future payments, based on real value. Not all lenders will, and there's a particular builder in town that specifically chose the lender they work with because the lender would escrow 0 on new construction the first year. Well, this is year 2 for some of those buyers, and now they can't afford their house payment because it went up $800 or $900 because they 0 escrowed last year, and then they got a tax bill. So again, you have to pay attention as a professional in the business. You've got to pay attention to your property taxes and how it's escrowed and ask questions. Yes, Christy?
Ask your question.
Good rule of thumb would be to take the value of that contract on a new construction and kind of figure from that, go back.
Absolutely. So here's my experience with builders.
Repeat the question for those.
Okay,
online.
Christy asked if she could just use the sales price, the purchase price, as the determining factor of the value if the appraisal district hasn't given their value. Absolutely. And some lenders, when they're estimating, will use that. They may even use the appraised value if there's equity in it because they want to double check or double be whatever, you know what I mean? They want to really be sure that they're not short, right? So that is a good question. Here's my experience with builders. They will absolutely, most of them. I have one builder that says, what we do at closing, don't call me. I'm going to give you the middle finger if you call me in November. I have another builder that says, I absolutely will not prorate anything different at closing, but he will write a check the day the tax bills come out. I've seen him do it for 15 years. So he's always very fair, and he tries to tell the buyers, hey, when that tax bill comes, call me. I'll be glad to write you a check. But he doesn't do it because, quite honestly, he may go argue the value. And that's why some sellers won't do it, because if we're before the end of July, they may be in the middle of protesting that value. So they're not agreeable because the amount you're presenting to them isn't necessarily final yet either, because they're protesting. Anyway, to go back to builders, I find that most of the builders, if you present it to them, are fair.
Absolutely.
Our local ones and the big ones.
Absolutely.
If you show them evidence from the appraisal district that they've included improvements, they don't want you to call them any more than you don't want to call them. And so they'll be fair. And that's part of the negotiation. If they're not fair, then go to the other builder down the road. You know what I mean?
Ask questions. Don't be scared to ask questions.
But yes, but if you are in that position, like Christy said, where you know that the current year is fully unimproved, and yes, your lender's doing an estimate, but you want to do your own independent estimate for the sake of your buyers, do it. 2.8% Sherman and Denison, 2.4 to 5% outside the city limits of any of our local school districts. Everything's online. The tax rates are online on the appraisal website. Okay.
And we can give you a link for where we use to calculate too.
Yeah. All right. So we have debits and credits. Bottom line, 8802. That's the second time you see the number. It was on page 1. Any questions on this so far? That's the cashier's check amount. That's the wire amount. Piggybacking on what she said earlier, if your client has an out-of-town bank or just insists on wiring, I don't like them, but I'm not scared of them. Just go through the protocols. Get them, call and verify them. Call independently and verify them. Don't call the number on the strange email you got. And to be clear, nobody from the title company is emailing you or your client randomly saying, hey, wire me money. We changed banks. That's never happening. Any title company. I'll vouch for all of them. They're not emailing your client randomly. I don't even give wiring instructions unless they're requested. Okay.
And verbal.
Yes. And then there's a protocol. Call and verify. Don't even look at the phone number in my signature. Google us. Anyway. All right. So page 4, not to harp on it too much. This is where your eyes glaze over, but you see the things you want to see. The loan cannot be assumed. There are demand features, not negative amortization. One thing that's interesting, can you do a partial payment? That's like the extra payment, really, is what that is. Can you make extra towards principal? It's on there. Here's where the escrows, this is how the formula, right, that they came up with. The security interest is on page 1. It's the property, right? So for any of you pre-2015s, okay, your first time through, you were there, right? This is what used to be the truth in lending, okay? Maybe 1 out of 50 closings, this buyer asked. So I'm going to defer to Michelle, but I'll tell you how I know what a truth in lending. So why on page 1 does it say 2.75%, but page 5, it says the APR is 2.929%. Simple question, APR is literally what it says, the annual percentage rate. So in 2022, your client paid 2.9% because they paid fees, okay? Fees are essentially, the government says, another form of interest the lender makes. But have no fear, they have no fees moving forward. They only have closing fees. So yes, they did pay 2.75 plus an additional 0.25%, because that's what the fees were, processing, underwriting, not pass-through fees. They're not paying quote unquote interest on that. But the government says a processing fee is nothing more than a lender fee like interest. So they paid 2.9% in 2022. Close?
That's actually the only number you can truly use to shop lender to lender. If you don't have the APR, you don't know what the lender's charging, because that takes the lender specific fees and calculates the APR based on the interest rate, the term of the loan, and the cost of that loan. So that's the number you shop with, not the interest rate. The interest rate has nothing to do with what they're paying for the loan. The APR does.
Does everyone understand that? Michelle's saying, I charged you 2.75 and it's origination fees to be more specific is what goes in the APR. I charged you 2.75 and $1,500 in origination fees. You found 2.5. That's great. But look at the APR. They charge you 6,000 in origination fees. That's why the APR is actually higher than my APR. That's the difference.
Good, thank you.
Oh yeah. I'm on a roll. No stopping me now. All right. Last section of page 5. I think it's important because what do you get with your commission check? You get a closing disclosure, whether you keep it or your broker or both, whatever it is, right? So in 6 years, when your buyer has called you to do something and you have questions on that original closing, okay, here's the information. Here's who their lender was. Here's who their title company was. Here's who the listing agent was or the buyer's agent. This is your source if you don't have your physical file or a good index. So it's important. And the lender has to have these blanks filled in. Mine might not, but theirs does. Any questions on a buyer CD? Okay, moving on. Seller CD, I told you earlier, prepared by the title company. Okay. No timeline, no 3-day rule, but this I won't speak for every title company, but I feel fairly confident in saying we get a balanced buyer CD, you have a balanced seller CD, it's coming over, unless there's something we're waiting on, an updated payoff, whatever. Here's the first page of the seller CD. So on the buyer CD, you saw that the buyer got a credit for $10.89, but that's not the full title policy amount. But wait, there's more. We'll come back to that. Information matches the top. So the equivalent of page 5 with the interested parties, the interested vendors, title company, all that, that's over here on page 1. There's a list of buyer's agent, seller's agent, and the title company. At the top, you have your credits. Sellers being credited the title policy. If the seller was getting non-realty items on the settlement statement, if they were paid a lease or whatever, as a credit, then that's where the additional credits would be. The debits. So we have closing costs of $11,811. That'll be on page 2. Payoff, there's those same seller concessions. So it truly is, if you remember the HUDs, a line item, credit debit from seller to buyer on my end, right? And so this number and the title policy number and the tax proration number all match what's on the buyer side because it is a line item credit from seller to buyer.
Hey, while we're talking about payoffs, you guys be sure to ask questions. If anybody had filed for forbearance in the last 2 years, and it was an FHA loan, there is an FHA lien that will show up in their numbers. And a lot of times what we're experiencing is the seller forgot. But not only are you going to see what missed payments they had during that period of time they didn't make payments, but they will also owe the lender for the taxes and insurance they did not pay when they weren't making their payment. So please, when you're listing the property, be sure you ask 3 or 4 different ways whether or not they skipped any payment during COVID. It's not going to show up on their credit reports. We're not going to see it if we were to talk to the seller prior to them actually listing their property, which is highly recommended because there's things that you don't know that they've forgotten about and you don't want to sell their house and make them homeless. So always refer your sellers if they're going to be buying something to talk to the lender before they list. But then that also helps you in putting together when you go to Sean's app and you put in the payoff so that you can figure what the net proceeds are going to be. You need to be asking those questions. So not only did they miss their payments, but the taxes and insurance they did not pay. And that needs to be added to the payoff so that your net matches the net that you told them in the very beginning when they listed matches the CD.
So listen, two things. One, I'm not a listing agent or an agent. So it's very easy for me to say this, but you got to have that uncomfortable conversation. Just say, because you're doing these estimates for them, right? So 2 or 3 things about payoffs. Number 1, whatever they tell you, if you're doing it in the app, add $2,000, add $3,000, because they always look at the principal amount due. They never, and as we talked about when we were doing the buyer CD, interest is in arrears. So they're almost always paying at least a month and a half worth of interest at closing. And if you've got a $200,000 loan at 4%, it's $1,500. You know what I mean? That's a lot more than what they're saying it is. Did they have an escrow shortage in 2021 because those values went up because the lender has added that to the balance due? Okay. So have those uncomfortable conversations, because that clue that Michelle just said, if they said, I got behind last year and applied for forbearance is not forgiveness. That money is due. And I cannot tell you, I don't think I've had a forbearance payoff that the seller was not aware they didn't have to pay it back. In other words, every forbearance payoff I've had, they said, I know how to pay it back. And here's the kicker, they signed it. There's a lien, they signed it. And they still didn't know, because those are generated through their lender. And at that point, Michelle has sold it to Sunstar Mortgage.
I
You
have
know,
not sold it because I don't.
but you know what I mean? But well, to actually, truth be told, not even that, HUD has generated this lien for them.
Yep.
So they have actually signed with the government directly for this forbearance. And that goes back to even before the COVID forbearance. There's forbearance is a program that's been around as long as I've been around. It's just not as advertised and prevalent until COVID hit 2 years ago. But forbearance is not forgiveness. That they tell you that they applied and were given a forbearance, you need to tell them, do you have that paperwork? Because the title company is going to ask you for that. That's a valid lien. You're going to pay it back. There are a handful of lenders that have carried that forbearance internally. So in other words, their payoff, it's really been tacked on to the end of the loan. So it's a line item on their payoff. I'm sorry?
Conventionals, they'll do that.
So it'll be a line item. So in other words, they've said that this $4,500 you didn't pay, the principal is still $4,500 less the new principal amount due, except for that's now due at the end or when you pay it off early. The other thing that's happened in the last 3 or 4 years, even before COVID, down payment assistance programs. Going back, I should probably add that to the buyer CD. If your buyer is participating in a down payment or a grant, okay, some of those, and I'm not going to be smart enough, that's a different class for a different day. Michelle can educate you guys on down payment assistance programs. There are versions that are not liens, but there are versions that are liens, 3, sometimes 5-year programs.
Some of them are 7 years.
So if you're sitting down with your seller and you sold in this house last year and you remember, or you pull out your paperwork and they had a down payment assistance, that's a lien because it's less than 3 years. So they're going to pay that back too. And they never remember that. When I do the closings, I say, if you pay it off before it matures, or if you sell this before it matures or refinance, you're paying this back. Okay. So if you closed them last year and now they're selling it and you remember they got a down payment, or you've done your research on your prior file, or they tell you, that's a lien, whether they like it or not. Okay. All right. I really went off. All right. So we have,
Oh, but that's good stuff because that sneaks up on you.
I'm really good at good stuff. I'm just kidding. All right. So debits, that leaves a net.
That's why I hired you.
Yeah, thanks.
That's why you're paid the big bucks.
So page 2, those fees I showed you on page 1, here's page 2. Look, you see ABC, it matches, right? It is similar. So there you go. And if you're a listing agent and you know there was a survey, and you want to say, did the buyer pay for the survey per the contract? You want to double check because you don't see it, ask. That's fine. Recording fees. So I get the question sometimes, I won't harp on it. Why do you see a daily interest? Why do you see an escrow amount? Well, look at the column. There's nothing in the column. That's my smart ass answer, right? But yes, because my closing disclosure is both. All right. So you will see how much the lender is collecting monthly, but who cares? Is your column blank? Is blank. They're not being charged. All right. Down here in H, commission. Is it right? This is where I always get the email. I'm only charging 2.5%. Well, how am I supposed to know? I don't know. Tell me. The only thing I know is how much you're paying the buyer's agent, because that's on page 10, right? I don't know if you have a different arrangement with the listing agent or as the listing agent, excuse me. Home warranty isn't on here. Contract says you're given one. Any other invoices? All right, real quick. The one I meant to highlight both. The one I highlighted, title policy endorsements, that's same thing going back to the contract. That is the paragraph 6A8, the survey amendment to have deletions from the final title policy. So in this example, the seller's paying for it. It's on the seller side. You would see the exact same dollar amount on the buyer side if it's negotiated for the buyer to pay it. Okay. That's the same fee no matter who pays it. The only difference in the fee is 5% for residential, 15% for non-residential, different class, different day. All right. Page 1. So in this example, the title policy, the seller is given a credit to the buyer for $10.89. Okay. But on page 2, they're charged $138 for the title policy again. The title policy in this case is $10.89 plus $138, whatever that math is. I was told there'd be no math. That's the different class. That's the total title policy amount. Without boring you, the lender is only required to disclose and charge the buyer the title policy up to the loan amount. So that difference, that $138 difference, is the difference of the title policy between the sales price and the loan amount. Super interesting, right? There's another form, which I'm going to zip through in a second, that shows the total title policy. If you've done the app, we have the app disclose it to you as the total amount, right? You can cross-check it there. Any of you other old timers like me carry the little pocket title policy chart, you can look on it there. Preston is waving. He doesn't even know what that is. Signature page.
Monica's got a question.
So just to be clear, because like most of the title companies give us the calendar. And in that calendar, you can look at the sales price and get really close to the title.
Yeah.
policy. And that.
That should be exact if you get the sales
Yeah,
price.
because it's regulated.
That's right.
Everybody, right?
That's right.
Yeah, okay, that's what I was telling you.
So if you're a seller and you're looking at, why would they only charge $10.89 when I know the title policy is $1,200? Look at page 2, there's that 130. So this, again, without harping, the government in their infinite wisdom to create a uniform document made it more confusing. Shocker, right? All right, real quick, and I'm not going to spend much time on these because it's super easy. So the government in their infinite wisdom said, I want to get rid of the HUD and the truth in lending, and we'll make one document. Well, they didn't. They made 4 documents. They made a buyer CD, a seller CD, an ALTA, and then Texas, a Texas disclosure. So the ALTA looks remarkably like a HUD. We don't send this to you guys. Sometimes I send it upon request, or I'll send it anytime you ask for it, right? But I send it upon request on those examples when you're a buyer's agent and your broker doesn't see the commission on the buyer CD, right? And you want to, but you can't get the seller CD because you're not representing the seller. So this is the alternative for your brokers that want to see that the seller actually paid the commission to you that they were supposed to. But anyway, the ALTA in short is the merged version of the buyer and seller as one spreadsheet. It's a completely different format, but it cannot be generated separate of this closing disclosure. So you can request it, and that's an example of what I told you with the commission of why you would request it, but it's not any different. Literally, I can't manufacture a version of this that doesn't match the closing disclosure. So the fees are the same. This one has the title policy just charged to the seller as one item. So it's a little easier to read because of that. So here, title policy is $1,227 on the seller side. So, but the bottom lines, the seller still netted $56.9. The buyer still brought $88.02. It's the same figures. That's it. It's just a merged version. So again, about the only time I have agents request this version or something is, again, when Guild did not put the commission, or if the buyer was only getting 2%. A lot of lenders default to 6% anyway. So this is where you see the accurate portrayal when your broker asks. Last item, I'm audited on the Texas disclosure. It's called T64. You'll see, I'm going to pick on you, Gina. Ebby, almost everyone in here. You're the only one not. And what I'm saying in ERA, your brokers that issue CDAs, okay, I am required by the state of Texas to disclose anyone I write a check to. I don't have to disclose the amount. So you'll see if we have Christy on one side and Gina on one side on the Texas disclosure. If you're curious, you're going to see up there at the top, you're going to see Maureen's name. That's a good example, but you're not going to see Christy's. Why? Without spreading ERA's business, I just cut one check to ERA versus Paragon, where they send me a commission disbursement and I actually write the agent a check. You don't see Maureen's amount. You just know, I'm just disclosing to you, I wrote her a check. That's all that means. Now going back to page 1 real quick, and that's the last one I have. Over here, again, this is where you see the total title premium charged to everyone involved. So the seller doesn't even say who pays it here, it just says this is the premium that was charged. If you're really going down a wormhole and you're curious, that's what you find. I'm done. Any questions?
Tell me again.
We got one question. I'll tell you in a minute.
That's fine. No. That's a good question.
So Michelle asked when you get a HUD versus a disclosure, a closing disclosure.
Count on a CD anytime you're doing a standard 1 to 4 family owner occupied purchaser, 100% across the board. Okay. HUDs are any commercial transaction, the buyer, dictated by the buyer. So commercial, not necessarily commercial property, but I'll say a
I'm
LLC buying
a
an
house
investment
and an
property.
LLC.
Yeah. So, and of course, aside from that, also commercial transactions too, commercial real estate. A individual buyer of a piece of land, this is where it gets complicated, of a piece of land that they are going to eventually build their home on is probably a TRID loan. A farmer
CD.
buying land or a person buying land to run cattle on is probably not a TRID loan. Does that make sense?
Yes.
But if I'm buying, even if I'm buying 30 acres that I'm going to build my homestead on, it's probably a TRID loan. At that point, there's other, we won't get into it, reasons why it could be knocked out for non-conforming, whatever, all that stuff. But that's your rule of thumb. They're buying their owner occupied, guaranteed. LLC's buying it, it's not going to be.
Does everybody feel like they're comfortable enough to know when to ask questions?
To Michelle.
And also to Sean. We want you guys to know when to ask questions and to know that it's okay to ask questions. We don't expect you guys to know this.
Should be selling the CBD. That's the question.
He's making fun of me for saying CBD again instead of CFPB. Anyway, you guys don't hesitate to ask questions. And also have conversation between you and the other agent, because how you guys set up the transaction in the very beginning is going to determine how smooth the transaction is going to be. So set those expectations up front. And if it ends up costing people less, they're a lot happier with us than the opposite. So over disclose all the costs associated with the real estate transaction. A lot of times we lose deals because we over disclose and we are honest about the information. And if that happens to you guys too, just know you did the right thing. I mean, choosing integrity over a deal all day long, choose integrity. So you guys now know, and you can't unknown what you know. So, but also educate others in the office. You guys, we have 700 licensed real estate agents in this area, and there's probably 40 or 50 people here. That is not enough people that know what you now know. So be sure to share the information with others. Don't keep it a secret. And if they're unsure, tell them to ask questions too. Next week, you guys are going to learn a lot on the appraisal side. And again, it's going to be information you can't unknow what you know. So, and have others show up, because the better you guys do at pricing the houses, knowing that, you got to also have a seller that's agreeable, but at least you presented the information, and also understanding the appraisal side from the lender's point of view, as well as the appraiser, and how that is different than the CMA is what we're going to cover next week. Y'all's job is really, really tough. My job's hard. I wouldn't trade you jobs though, at all. Because y'all have to get sellers to agree to sometimes unfactual information, and it's y'all's job is hard. Yes. So we're just doing everything that we can to give you guys the tools to do the best job that you possibly can, because again, we're stronger together as a community, and the better we can be at communicating the correct information, the better we can be as professionals, and the more I can empower you guys to go out and have conversations with your neighbors, with your coworkers. I have door knockers if anybody wants to door knock in their neighborhood that you guys can just customize with stapling your card on there. But the better we can be at spreading the word in our community, where we're serving our community with local people that we know, like, and trust, the fewer maybe of the out of towns that don't understand our community would, the less likely they'll come into our area, because you guys have solid relationships and you're asking for the business from coworkers, your spouse's coworkers, your friends, your family, your neighbors, the people you go to church with, the people that you're serving in on these communities. You guys don't be scared to ask for the business, because we together are stronger, and we want to keep as much as we can the business local. So y'all are the boots on the ground. You are our army of people. So anything that we can do to provide you guys the information that you need to be boots on the ground, to show people what we can do locally and how we can serve them, the better. So
Thank you all for joining. Be sure to chat real quick if you're here for CE, if you're online, so we can be sure that you get credit. Let us, we need your Texas and your Oklahoma license based on credit. Those of you guys are in person, be sure you've signed in. That's how we're keeping track of the attendance of 8 classes for the free MLS dues. And it's also how we're keeping track of the CE credit. When we know that the EventBrite's working right, we like to use the EventBrite as one spot for everything. So
Thank you guys
thank
very
you for
much.
coming.